Palantir is one of the most popular growth stocks out there, and bulls are probably celebrating right now as the stock is up more than 180% in this year alone. The question is, as we head into 2024, where does Palantir stock go from here? Should investors take profits, or should they hold on longer and hope for more upside down the road? Well, that is what we're discussing in today's video. I'll briefly go through Palantir's Q3 results, and then I'm going to talk more about the company's valuation and what I think about the stock moving forward. As always, link to my article in the description box below, and with that out of the way, let's jump straight into the video. Palantir posted strong revenue numbers in Q3, beating analyst estimates by $2 million and management's guidance by $3 million. In Q3, revenue was $558 million, which is up 17% year over year, and as you can see, growth re-accelerated quarter over quarter from 13% in Q2 to 17% in Q3. Many investors were worried about Palantir's slowing growth, but the rebound in Q3 showed that the growth story for Palantir is far from over. It's nowhere as high as the growth that we've seen in 2020 and 2021, but the re-acceleration that we see in Q3 was encouraging, and that is probably why investors were so upbeat about Palantir's Q3 results. Breaking it down by segment, government revenue was $308 million, which is up 12% year over year, and by geography, the US grew by 10% year over year to $229 million, while international grew by 20% year over year to $78 million. As you can see, growth for the segment has been slowing down over the last few quarters, which is a concern considering that Palantir was first built for the defense and intelligence community. But the good news is that management expects US government revenue to accelerate moving forward, as there was a pickup in activity at the end of the US government fiscal year, so expect brighter days ahead for the government segment. On the other hand, the commercial segment was the star of the show, growing 23% year over year to $251 million, and this was a really strong performance as growth re-accelerated by 1,300 basis points quarter over quarter. Breaking it down by geography, US commercial revenue grew by 33% year over year to $116 million. This is really strong, but it would have been stronger if not for the negative impact from strategic commercial contracts or Palantir's failed SPAC investments a couple of years ago. So without this impact, US commercial revenue would have grown 52% year over year, but regardless of that, strong growth for the US commercial market was due to the recent launch of Palantir's latest offering, AIP. AIP, which stands for Artificial Intelligence Platform, was only launched in April this year, but it's already making a huge impact on the business, so just imagine how big it can get over the next few years, which is going to be exciting. Moving on, here's a table of Palantir's customer count, which is broken down by segment as well. As you can see, Palantir grew total customers by 34% year over year to 453 customers as of Q3, driven by continued interest among commercial customers, which grew by 45% year over year to 330 customers, again due to increased demand for AIP. And I think this is probably the most impressive thing coming out of Palantir's Q3 earnings report. In addition, management mentioned that nearly 300 companies have used AIP. So if you take 300 AIP customers, divide by 330 commercial customers, you get an attach rate of 90%. In other words, 90% of commercial customers are already using AIP, and considering that AIP was only launched in April this year, that is just incredible, and it speaks strongly about the kind of value that AIP brings to these commercial customers. So overall, Palantir is redeeming itself as a growth company, as we've seen from the rebound in revenue growth in Q3. While the government segment is somewhat maturing, the commercial segment seems to be firing on all cylinders as the new platform AIP takes center stage. But the most important number coming from the report is that Palantir's total customers continue to grow rapidly. And this is great news for Palantir because customer growth is a leading indicator for future revenue growth. And given the overwhelming demand for AIP, I expect Palantir to continue to acquire more customers in the next few quarters. Moving on to profitability, Q3 gross profit was $450 million, which is up 22% year over year, and this represents a gross margin of 81%, which is a 400 basis point improvement year over year and a record high as well. So as you can see, Palantir continues to gain economies of scale and increase its earnings potential, which is great news for investors. Operating income was at a record high as well, which was $40 million in Q3, representing a 7% operating margin. As you can see, operating margin expanded by 2,000 basis points year over year and 500 basis points quarter over quarter. So Palantir's profitability is improving very quickly, which is great to see, and this trend should continue as Palantir scales further. In other news, stock-based compensation was $114 million in Q3, which is flat quarter over quarter. However, SBC as a percentage of revenue continues to fall from 21% in Q2 to 20% in Q3. Yes, SBC is still high at 20%, which causes shareholder dilution. However, dilution should decrease with each passing quarter as the company is now focused on profitable growth. Moving down the income statement, Q3 GAAP net income was $72 million, which is a 13% net income margin. And this marks the fourth consecutive quarter of GAAP net income profitability, as you can see right here. So last year, the company had a net loss of $371 million with a negative net margin of 20%. And today, Palantir has turned profitable, and moving forward, I expect net margins to continue to expand, which should reward shareholders in the long run. All in all, nothing much to talk about here, but Palantir's profitability continues to improve with no signs of slowing down. Without a doubt, Palantir is no longer regarded as an unprofitable growth company. It is now a highly profitable growth company capable of delivering strong, durable earnings for years to come. Quickly looking at Palantir's balance sheet, the company has $3.3 billion of cash and short-term investments and $0.2 billion of total debt, which puts its net cash position at about $3.1 billion as of Q3. As you can see, Palantir's net cash balance has been increasing over the last few quarters, which is great to see. Moving on, Palantir's free cash flow was $132 million in Q3, which is a 24% free cash flow margin. Again, not much to talk about here, but Palantir continues to maintain strong free cash flow generation quarter over quarter. And given the trajectory of the business today, I wouldn't be surprised if Palantir reaches a long-term free cash flow margin of 30% or even 40%. Turning to guidance, management expects Q4 revenue of $599 million to $603 million, which implies an 18% increase year over year if we take the midpoint of their guidance. This also means that growth is set to accelerate once again from Q3's growth of just 17%. And judging by the fact that management always beats their own guidance, I won't be surprised if we see 19 or even 20% growth in Q4. Next, Q4 adjusted operating income is expected to be about $184 to $188 million, which implies an adjusted operating margin of about 31%. For context, Q3 adjusted operating margin was 29%, so this means that profitability is set to improve even more in Q4. Management also raised their full-year revenue guidance by $6 million to about $2.218 billion, which implies a 16% year-over-year annual growth. In addition, management raised their full-year adjusted operating income guidance by $33 million to about $607 to $611 million. All in all, really strong guidance by management, especially with adjusted operating income, which was raised more than revenue, as you can see right here, which is a clear indication of strong operating leverage. Whatever it is, we can expect robust growth moving forward as the AI market is expected to explode in the next few years from $96 billion in 2021 to $1.8 trillion by 2030. And with Palantir's best-in-class software, the company is well positioned to capture a good chunk of this massive emerging market. As CEO Alex Karp mentioned, companies are scrambling to deploy software platforms that will allow them to leverage AI, which is evident from the company's robust deal pipeline of 80 deals of at least $1 million signed in Q3, which is the most in a single quarter. In addition, total contract value is up 29% quarter over quarter to $830 million. US commercial deal count is up 2.4 times year over year, and US commercial total contract value is up 55% year over year to $252 million. Moreover, management is seeing the acceleration of larger deals and shorter times to conversion and expansion, due to the rapid expansion of AIP and a change in their go-to-market approach, more specifically the launch of their AIP bootcamps. And that is great news for Palantir shareholders, as future deals will likely be reflected in Palantir's income statement sooner than later. That said, given Palantir's strong growth, improved profitability, robust deal pipeline, effective new marketing strategy, and the emerging AI market, I think Palantir will do very well in 2024 and beyond. Let's now discuss valuation. If you look at the chart right here, you can see that Palantir trades at an EV to revenue multiple of 14 times and a PE ratio of about 62 times based on next year's estimates. While valuation multiples have compressed significantly, as you can see right here, there's no denying that a sales multiple of 14 times and an earnings multiple of 62 times are expensive. And that's thanks to the 180% rally that we saw this year. However, there are reasons why Palantir is trading at a premium, including strong competitive moats, improving fundamentals, as well as a long growth runway in AI and big data analytics. That being said, I think it's reasonable to see the stock pull back a bit or trade sideways for a while before making new highs. But moving on, a reason why Palantir's price action has been so strong is due to the fact that analysts have turned more optimistic about Palantir. As you can see, there has been 15 earnings per share upward revisions and 14 revenue upward revisions in the last 3 months alone, with barely any downward revisions. If we take a look at the table below here, we can also see earnings per share estimates in 2024 and 2025. I think these are adjusted EPS estimates, but whatever it is, it looks like EPS estimates are very conservative in my opinion. In 2024, analysts expect EPS of $0.29, which is an 18.7% growth. I don't know about you, but I think Palantir can grow earnings way faster than 18% in 2024. In my opinion, I think an EPS of 40 cents in 2024 is more than likely, given Palantir's strong growth and profitability momentum. And if we see stronger than expected earnings numbers, I think we'll see Palantir stock re-rate higher from here. Taking a look at my DCF model, here are my key assumptions. For revenue growth, I followed analyst estimates for the first 3 years, and for the remaining years, I expect growth rates to drop to 18% and then 15%, and by 2032, I expect revenue to expand to $9.6 billion. I also expect Palantir to gain economies of scale over the next decade, so cost of revenue and operating expenses as a percentage of revenue should drop over time. By 2032, I expect a free cash flow margin of 35.3%, and for reference, Microsoft has a free cash flow margin of 36%. And given that Palantir is a pure software business, I think a 35% free cash flow margin for Palantir is quite conservative. That being said, based on a discount rate of 10% and a perpetual growth rate of 3%, I arrive at a fair value estimate of $15.21 for Palantir stock, which is about a 16% downside from the current price of $18.18. So that is my base case scenario, and as you can see, Palantir is trading at a premium currently. But if you look at this table right here, I've also included my bear and bull cases. As you can see, for my bear case, I assume an $8.8 billion revenue at a 31% free cash flow margin and a perpetual growth rate of 2%, which returns a price target of about $11.80. As for my bull case, I expect a revenue of $10.9 billion by 2032 at a 38.5% free cash flow margin and a perpetual growth rate of 4%. Assuming a 10% discount rate, I expect a price target of about $20 for the bull case. Honestly, I'm leaning more towards the bull case, but I just want to run 3 different scenarios to get a better understanding of Palantir's valuation. And just by looking at the results of my DCF, you can tell that Palantir looks quite overvalued. And that's why I trimmed my position a few months ago. However, I think there may be more upside for Palantir stock given the shift in sentiment and the strong momentum of the business. In addition, Palantir could be added to the S&P 500 anytime now, which could be a major catalyst for the stock, which is also why I continue to hold a modest position in Palantir stock. My investment thesis on Palantir revolves around the idea that Palantir has one of, if not the most powerful software stack in big data analytics and AI, which is why some of the most important organizations in the world choose to work with Palantir. And that is reflected in Palantir's exceptional Q3 performance with strong customer growth and a robust deal pipeline. In addition, profitability is getting better and better with each passing quarter, and now Palantir is no longer regarded as a loss-making growth company. Additionally, Palantir still has a long growth runway ahead as AI is still in its early innings, and with its differentiated artificial intelligence platform, Palantir is well positioned to grow for years to come. In my eyes, the biggest risk is valuation and whether Palantir can sustain high growth to justify its premium valuation. While Palantir stock may look expensive, the company's improving fundamentals, strong outlook, and a possible S&P 500 inclusion could push the stock even higher. With that being said, that's the end of the video. If you find value in this video, please leave a like, comment, and subscribe to my channel for more investment content like this. As always, I appreciate you and I hope you have an amazing day. See you guys on the next video.